Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are. Yes, I wonder where my friends have gone.
Where'd they go?
Tell me, where could they be while I'm waiting on this conference call?
I don't know.
Well, I'm holding on my phone. Yes, I'm holding on the line. Hey, I don't know where they are. I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away.
Hey there, folks. So thank you so much for joining me this afternoon. And today we're officially coming out with my 2026 forecast. So thanks for joining me. Let me know through your chats. Let me know if you're a customer, like somebody looking to buy a house, a homeowner. Maybe put something in there like homeowner. If you're a realtor, put a house. If you're a broker, loan officer, something like that, put a dollar sign. What I want to explain to you guys do and walk through my thoughts of what I think is going to happen in 2026. So, what I need you to do first is this. Let's go back in time and go over the last couple of years. What happened? You had a lot of people starting in 2022, and this is where I kind of my channel just kind of petered out because I didn't jump onto the crash bandwagon. You remember in 2022, everybody, here's what it was. You had these things, how bad is it going to be? And then this guy, he consistently still says it today. Housing market's going to crash worse than it's ever been, worse than 2008, worse than, it's ever been ever. And then what have you seen over the last couple of years? Let me know. What I predicted over, let's just say in 2025, here's what I thought. So when you're watching these channels, if you're a homeowner, you're a home buyer, I want you to understand who you're watching. So here's what I've predicted in 2025. I was actually on News Nation, NBC News, Yahoo Finance this past year, and they've been calling me, just getting input on these things. So I thought I'd come out and do an official live event with my forecasts. So when you really dive into housing, you're going to see a theme here, and it's going to all depend right up on there on affordability. So what I want to talk about is where mortgage rates went, where home prices have went. And again, let's retro back to where we thought in 2025. So the housing market's going to be completely flat. It might be up just a tad. My expectations were by year end, Q4, we'd be about 6.25 in rates, and we nailed them both. Okay, so in the previous year, we kind of said the same thing. My rates were a little bit different. I think I was off about 0.25% there, but that's what we've predicted over the last 2 years. So you see, I'm not on this bandwagon to get your clicks. I want you to truly understand the housing market. So the first thing you want to look at is everybody keeps saying, okay, mortgage rates have to plummet to make housing more affordable, or home prices have to crash. One of the two have to happen. Well, if you're watching this, if you're a consumer sitting on the sidelines, that housing price crash didn't happen, but you did get a huge reprieve in interest rates. Do you realize in 2023, that's when things started getting a little rocky, but we did so many refinances the years before. I knew there wasn't going to be a housing crash. I just knew everybody, they're locked in their homes. House prices are way up there and just people can't afford homes. And then when the house prices or the interest rates really took a spike, I'm like, okay, this is going to basically halt people buying. But if you're in a house, you're in a great position. You got equity, you got the lowest rates ever in history. You're in a good position. So then we want to fast forward. At that time in 2023, rates hit 8.3%. Don't believe me? Check out my video this morning. I posted it on there. I gave you historical rates. Where are they today? 6.2. Okay, so we're 2% lower than where we were about 2 years ago. So rates are coming down. What have we had in home prices? Okay, that's what we're going to go through next. Home prices, which you've seen, is they've been completely stagnant. They really haven't moved. Some areas, yes, some areas like Austin. I just talked to a young lady today. I'm going to start doing Texas talk once a month with her, just to give you some insight, what's going on down there. But some areas did falter. And Austin, it was down, I don't know, let's say it was down 12. But if the market in general ended up the year at 0 or up 1%, that means something offset Austin. So something had to be up higher than Austin. So generally speaking, yes, there's some areas that didn't do fair so well. But if you look at all the historic numbers, we're basically at the peak of where housing is. Where it's going to go from here, it's going to be dependent on affordability. Now, let me explain that part of affordability to you, especially if you're a realtor or loan officer. Now, if you're a consumer out there looking to buy or refinance, this is where I really need you to understand. If you're currently in your home now, the only thing you can really do is your tax rates and payments are probably going to go up every year. Homeowners insurance, the same thing. So if you have a rate, maybe it's only saving you $150, $200 a month. Our average savings right now with most consumers is we're saving them, Alan did a report the other day, I think it was 3% on their rate, and it was over $500 a month. It was like $566 a month. That's why he told me. I'm like, that's crazy. So if you're a current homeowner, there's really not too much you can do but look at refinancing, and that's we can help you with that. I'm going to give you guys a ton of calculators and tools for free that you guys can use. I don't care if you're looking to buy your house, because it's going to let you know how much can I really afford. If you're a homeowner, does it make sense to refinance now? Or we know rates are probably going to go down a little bit further in the future. So should you wait? I'm going to give you those. And then I'm going to give you a tool that's actually, you're going to plug in your information and it'll tell you all the programs that are available to you. That's going to help you navigate this home ownership. So these are going to be tools for those out there. If you're a homeowner, tools for you. If you're looking to buy, tools for you. Realtors, loan officers, we got everything for you. So let's get over to this piece of the puzzle. So rates are down, house prices, let's just say they're stagnant. Why are home payments continuing to go up and up and up? Well, let me get to this piece of the puzzle right through here. This is a huge piece that a lot of people, especially if you're a new home buyer, you really don't understand. Real estate taxes. Now, I'm going to go down a section here that's probably going to tick a lot of people off, but the more free stuff we give out, the money doesn't get plucked off of trees. Okay, you get what I'm saying. So what has to happen? Folks, I'm in Chicago. They just jacked up our real estate taxes again, but we're behind this county over through here. So let's say you're in New Jersey. This is the highest county in the whole, basically, country. If you bought a $500,000 home, your real estate taxes are going to be $15,000. I'm going to post this tool. We use this internally because when you guys reach out to us and you want quotes and things like this, we want to be as accurate as we can. So I'm going to post that calculator down below. Check out the area, especially if you're looking to buy a house for you new homeowners. Plug in the zip code. It's going to tell you specifically at that value because it's all based on percentages and factors and stuff. So you're going to just put in the price of the house and it's going to tell you, bam, there's how much taxes you're going to pay. And that's how simple it is. So you have taxes like this that aren't getting any cheaper. Parts of Illinois, I did a research about 2 months ago, in the biggest sections of Illinois that really can't afford higher taxes, and these are the south side of Chicago and things like that, they had price or tax increases of some areas of 120%. So taxes are crazy right now. So I don't want to get political, but again, the more you give away, the money has to be brought in some way, somehow. And the only way the government makes money is taxes. They don't have jobs. They work for us. So it's based on taxes. Okay, so let's get to the next piece of the puzzle. Let's basically start my housing forecast. And this is going to be maybe not as dramatic as a lot of the other places, but you're going to see a theme here. And I come out every day and my whole goal is to be as true as I can to you. And that's why we're changing kind of our symbols and everything to TRU, true. That means the rate update. Kind of nifty. I thought that one myself. So let's get into the 2026 housing forecast. If you guys have any questions, please pop them up here. Let me know, first off, let me know if you can hear me okay. Sometimes I come in and I sound like a tin can, and I just got some new mic stuff, and so hopefully you can hear me okay. So just give me a thumbs up. I won't even post you up if you don't want to be. But let's go through here. Here's what you're going to see. You're going to see this on mainstream media as well, because they're going to start thinking, okay, we've been complaining about rates, but once you really do a study, rates are way down. Okay, you might not say, okay, they're down, but they was at 8%. Now they're 6%. Pretty big move there. So you have home prices flat. So why can't houses be affordable? Well, let's kind of dive through here and I'll kind of explain to you, especially if you're a new home owner or looking to buy. So let's get through there. Home prices have basically just gone sideways. Mortgage rates are down from their highs, yet prices still feel unaffordable. Well, what makes up the housing payment? So if you're paying rent, you just make a payment out, you pay that, and then you pay your, cable bills and other things. But when you buy a house, actually you have a loan, okay? And then the other pieces of that puzzle you're going to have to pay is real estate taxes. I just showed you that could be maybe $1,000 a month. Then it also depends where you live, because you're going to need homeowners insurance. Now, that's another piece of the puzzle. You might be in some areas where it's dirt cheap, and then you might be other areas that it's like once you just add that on, I can't afford a house. So let's kind of go down through here, and this is what we're going to talk about in today's video. Then I'm going to get to you and show you the areas that are most affordable And those are the areas you're going to see the most appreciation if it gets any at all. So my expectations this year, we're still going to have a flat market. We're going to have some markets that are pretty darn good. We're going to have markets that just, peter out like they always do. You're going to have the yin and the yang. Which areas it is going to be, I don't know, but I'm going to show you the areas I'm thinking and the whys behind it. So let's break this down. Prices have stabilized, rates eased, taxes and insurance have surged. Okay, so let's go down through here. Here's what home prices have done. And I Google searched this and I put it through 3 AIs. So if you guys want to fact check me, you are more than welcome to do that right down below. But going back to Q4 of 2021, this is when everybody started going back here and it's going to crash. And, basically if you saw house prices in some areas, double in 3 years, you'd think, okay, something's got to give here. But if you know the dynamics behind all this, you can understand why it didn't crash. Okay, so here's what we've seen. 2021, the base price we're going to use for the house price is $556,000. The change from the previous year was 18%. Then you went into Q4 of 2022, and you had 617. Again, in 2022, you had house appreciation. Everybody's saying the housing market's going to crash. So you scroll all the way down. I didn't need to go through each year with you, but you can see even in 2025, the average market from Zillow, Redfin, all the other stuff, and this might be a little bit high or whatever, but it's 3%. Okay, the normal appreciation rate in history is about 3 or 4%. So this is what you've seen over the last couple of years. But here's what's really affecting things. Remember, we just went through, rates went from 8 to 6. So if you sat on the sidelines, you did good there. Well, you also, house prices really didn't move that much. So in your area, you might have did really well. Some areas you might say, the house prices keep going up. So you might have lost out. That's your area. And that's why I keep saying you have to understand your area. But then the next thing we're going to get to is, sorry, I'm looking the wrong way. I must have my monitor mirrored today. So my apologies. I am looking at my screen, folks. So let's get to the property taxes. Here's where this might be a factor if you're a remote worker and you're thinking, I'm going to move somewhere. This might be a factor of what really makes you move somewhere. So let's dive in. When you go through here, I did the top 5 states that have the highest tax rates, and you're going to see the variances of this, and hopefully it clicks when we're done. We have New Jersey at 2.26. Here's kind of an estimate we did. So that's the average, but in this county, like I said, I did it for purpose. I pulled up this address. This is the highest basically in the country. So you have tax rates up to 3%. Okay, so let's get back to this. So you have New Jersey. This is saying 2.26. So how much more inflated might these be? Okay, let's just say. I know Illinois, they just jacked the heck out of our taxes here. I don't know about these other states, but most likely these are states where they're going to jack up the taxes, if you know what I mean. Okay, so then you go down through here, and then let's go through these states. Okay, so Hawaii, the tax rate's 0.27. This is 3. You imagine putting, I don't know if I can add in 0.27 to this, but 0.27, if that's 3, it's $1,000 versus $15,000. Okay. Alabama, 0.41. You go all the way down to here, Delaware, 0.57. That's a fraction of this. So again, would you move to New Jersey? I'm just saying, when we look at the mathematics behind it versus one of these areas through here. Okay, so that's one piece of the puzzle. Now, here's the shocking piece. Before you even start looking for a house, and that's all I can say, shop around for insurance rates, folks. I was with Allstate for like 25 years. That's who my dad was with. I was like, I'll just keep it. I then had a insurance broker, a friend of mine, one of my best friends, kept saying, come on, just get a quote. I'm like, oh, here, give me a quote. It was $2,000 difference. Now I have 2 houses. So I have one here and one in Florida, but still $2,000 on just my insurance. Okay, I'm just saying. So here's where this is going to really get nuts. Go down through here, homeowners insurance. If you're in Florida, please make sure you call an insurance agent and just get a quote. If you're in a flood zone, check it out. Make sure you look at flood insurance. Okay, but you go through here and you're in Louisiana, $4,000. So let's say these are, so these are $300 to $400 a month. And then you go over this tax rate of $1,000 or so a month. You have $1,500 a month just paying taxes and insurance. So you getting where I'm going? Let's keep scrolling down. Okay, here's the lowest insurance. So you move to one of these counties, states, I'm sorry, you're going to have that. Far cry from this. You know what I'm saying? So let's get down through here. Where's housing probably going to do the best? Well, if you actually do a search on this, the top 10 cities in the country that's going to fare the most, these are top 10. Why? These are the most affordable. Are you wanting to live here? Well, that's up to you. But I'm just saying this is the mathematics behind it all. So these are the areas that are going to most appreciate because people can get into these homes. Just think of it. The average house is maybe $300,000. That might not be what it is in your area. But if you look at that and then you start adding all these other things on top of it, you can't afford a house in some areas. So now you can understand, when you're seeing Austin, it's a completely different story. If you guys would like to chime in, you're more than welcome. But Austin, there was way too many people that bought into that. It was a great place. But they just, basically rushed in there, overbought the place, and now they're living on that. Then you had other areas, the Midwest. You have the Northeast, areas like that doesn't have huge appreciation. Like I'm here in Illinois, we see 4, 5, 6% a year, but it's nice and steady. It's just, but they're taxing us out of the state. You go to our state through here, you have an average tax rate of 2%. You're talking, this is 3%. So the average tax rate, let's say it's $10,000. And I can guarantee on a $500,000 house, it's going to be more than that. We just closed on a loan. It's in McHenry County, $350,000. The tax bill was $9,000. So think about that. That's $750 a month on top of your mortgage payment to see, can I afford that house now? So when you're out there looking, please be cognizant. Here's what I wanted to take away from this. And I'll get to a couple of these things in a second. I got some tools for you here in a second. The biggest takeaway is make sure you understand your market area. Reach out to us. We might have some connections with a realtor in your area. We can route you to them. We'll get you pre-approved just to give you an idea of what kind of payment you can really qualify for. And then when you go out there and start working with that realtor, then you can start getting a feel for, this does work or it doesn't work. So that's what a lot of people are doing. What a lot of people did was kind of got duped into buying their homes. And you see a lot of those videos. Oh my God, I way overpaid, or I bought this and it's dismal. That's what I don't want you to get into. If you really dissect a lot of those videos, if you're kind of in the business, you sit here and you scratch your head and say, I wouldn't let my client buy that house anyways. Or they were completely duped, like D.R. Horton. That home builder. I don't know if you saw that article. They were just sued. And this is all public knowledge. They were just sued because here's what happened. And this is if you're out there looking to build. When you build a home, think of it. You're building a house on a property that was vacant. Okay. So the real estate taxes that whole time were being paid on that vacant property. All right. So now you have a house that you just put on. So the vacant property, what's it worth? 10 grand. Then you build this really nice house on it. Now that whole thing is worth $350,000. Well, D.R. Horton was getting you into the house, and a part of this thing here, they were taxing the people on just the raw land, not the real tax rate. So those people got into the house, maybe their tax bill was $50 a month, their real estate tax bill when it should have been like $700 a month. And a lot of them got through it. They went through their underwriting because D.R. Horton has their own mortgage company and so forth. And folks, you Google search all this that you want. I'd be more than happy to fact check me down below. But they got the people in there. And then all of a sudden, people start getting, after a year, getting notices from their mortgage company that their mortgage payment or their escrow was short. So let me explain what I'm talking about. When you go in to buy that house that you're looking at, let's piece all this together for you. Right through here. When you buy a house, you have the mortgage payment. Okay. That's right through here. That's going to be consistent of how much you're going to be lent on the house, what the rate is and what the term is. Let's get to some calculators here in a second. Then you're going to have property taxes. And maybe I'll run you through a scenario here if somebody wants to throw me some numbers. Then homeowners insurance. Okay. I used to just calculate when I did homeowners insurance. It's $100 a month. That was 5, 6, 7 years ago. Now $300. Just to be safe when we're qualifying people, because we really don't know. That's why I need you to really call your insurance agents. So let's break this down a little bit. So let me go over to, let's see what this one is. This one is the max purchase. This is perfect. So if you're looking to buy right now, and folks, I have this on our website, go to my YouTube channel. It's down below in the description, and there's some of these are there, some aren't there yet. We're testing them. So if you do download one and you see any errors, please just email me, text me, whatever, let me know. My son actually created these. They're awesome. So thanks, Pat. So let's give Pat a thanks. At least give us a thumbs up, at least, folks. Okay, so what you're going to do here is you're going to go in. It's pretty simple. I think I pre-plugged this one in. So let's go into this one, and this is the max purchase price calculator. It's in our description down below. $85,000 is what I make. Okay, I have total bills right through here of $850. What I have is I have a car payment of $500, and I have 2-3 credit cards. So it's $850 a month. I can buy a house right now, and I got 5% down, I think. Okay, so put down 5%. Right now, today's rates, we're going to go with 6.25. It's pretty darn close right through there, and that's what I've been predicting in Q1 of this year. So 6.25. I want a 30-year term. Here's that property tax rate. So you sit here and scratch your head. So what I want you to do is stop right here. Make sure wherever you live, you use this calculator right through here, and make sure you're getting at least a number from here. Don't just guess it. Don't use what you're Google searching. Make sure you go to this calculator. Okay. And you need to be precise in this one, because you can see it could make the house affordable or unaffordable for you. So let's just go in. The average is probably 1.2, I think is about the average throughout the country. Homeowners insurance, I don't know, this is a factor. Let's just put in 0.5. HOA, if you're looking to buy like a townhouse or a condo, something like that, that's attached to other things, might have pools and stuff. This is your homeowners association. So plug that in if you're looking to buy a townhouse or a condo or something like that. And then for now, let's just stop. Okay, so I am eligible for a VA benefits. We're going to stop here for 1 second. If you're eligible, still hold on. Or use more aggressive debt to income limit ratios. So what we want to do is, what we wanted to provide you is, these are the common percentages that people use when they're buying a house. Like you might have heard of, you should only use X amount of your income each month for your mortgage payment. Well, that's what this conservative approach does. So let's jump in here and do this. So for now, let's just hit see my estimate max reviews. Okay, so now it's telling us, well, with a conventional loan, with good credit, I should be able to qualify for up to $283,000. With an FHA loan, because they have a little bit higher ratios and the rates are a little bit lower, but you pay in mortgage costs and things like that for this, you go up to $321,000. If you're a veteran, because they have other benefits here, you could possibly qualify up to $370,000, and it kind of goes down through. So let's now click this. So now you saw 283, and again, that's a debt ratio of 43%. And what I mean by debt ratio, let's see if I can zoom that in. That is, what you do is you take your monthly income before all your taxes and everything are taken out. Okay, so before medical stuff and everything. So you take that number, and that's your income. All right, and then you take all your debts. Only your debt's really on your credit report. We don't need your cell phone bills, and you might have a dentist bill and things like that. Just maybe like a credit card, car payments, and things like that. So add that up and put it into this section here. Okay, and then make sure you run the tax calculations and everything else. But now what we're going to do is, so when you go over, my apologies, I need to rewind a second. We got your debts. Okay, so now this is trying to factor in what that mortgage payment it would be, plus your debts won't exceed 43% of your income. Okay, but the programs allow higher than this. For like example, FHA, we're saying a conservative approach is 48%. They allow 57%. It's not my rules, folks. These are the guidelines. Okay, so let's get over here and say, okay, I'm eligible for VA, and I want to stretch my limits just a little bit, but still qualify. We click this, and let's see if it changes. It should change. Look at so. Now, it should have changed. With a conventional loan, you can get a $298,000. With the VA FHA loan, $339,000, VA $389,000. So you can see how those numbers go up. So this will help you at least narrow down some options that you have. Now, if you're an investor, you own other real estate, things like that. Well, let me give you a little bit of tidbits about me first. I have this at the end. So let me explain to you guys who I am. If you're watching me today, you probably know who I am. But if somebody is watching this video, folks, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. Here's my website. Okay, so if you need some help with any of this, just what we prefer you to do, give us a call. Not right now because I'm doing this. And there's just me and Alan. Or ask Dan. Send us a question. schedule an appointment. We really don't want you to apply. We want to know a little bit about you, and you probably want to know a little bit about us. It might be a good fit, might not be a good fit. But if you're out there right now and you're like, okay, I'm a homeowner right now, and I really would like some help, just seeing would a refinance make sense? Well, schedule an appointment or do this. I created a tool over there. It's called RateWatch 2.0. Plug in your mortgage information, okay? And then let me know what rates you'd be interested in refinancing. What I do is I don't sell the data. I actually have AI behind the scenes running, and it alerts me and Alan of if you triggered basically saying, hey, their rate that they want to look at, it just triggered. So we'll call you, we'll email you, we'll usually send you videos going over the numbers, and that's what that's for. But if you're in the process right now of getting a mortgage and you want to check, here's my slogan. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. So folks, I've been doing this a long time. I've been in the business 35 years, I want to say, something like that. I've always been a broker. So when I joined the bank, this was very interesting because they're kind of set up as a broker. Okay. So I'm licensed in all 50 states as well as Puerto Rico, but we're also set up with over 30 other lenders. And the reason why they did this is it was ingenious. They're like, when people call, what do they really want? They want options. So why don't we just have the ability to give them options? So that's what they did. So I'm in all 50 states as well as Puerto Rico, and I have programs all the way from jumbo programs to 5-day HELOCs to DSCR programs for investor loans, 1099 programs, bank statement loans. So we're going to have an eligibility calculator coming out soon that we'll be posting as well. It is awesome and off the charts. My son's adding some HELOCs in there right now. So when that populates, it's going to be earth-changing for loan officers because I didn't even know half these programs were available. So stay tuned for that. So let's get back to that. So that's the max calculator there. Let's get over to this. So what I'm trying to explain to you guys is here's my outlook. Now, my outlook on interest rates, that's coming out next week, but let me give you a sneak peek to that. I don't really think rates are going to do all that much because the reason is, why should they? Okay, so you might want to say, let's look at the economics that the Fed and the markets look at. Well, you look at it, and it's like the unemployment rate. It's ticking up a little bit, but it's not really falling off a cliff. Okay, and then you look at inflation, and I'm predicting this, and I'm calling it the January effect. And I'll give you a sneak peek of what it is. The January effect to me is a lot of retailers they were getting hit on tariffs, and they're like, okay, how do we pass this through everybody, in a crappy year anyways? And then you get the holiday season, everybody's just dumping everything they got. So as a retailer, you're like, okay, what am I going to do? So you wait till January, and then you start coming out with new and improved and this and that because you dumped all your other stuff. So I'm thinking, my thought process is January, we might see a little spike in inflation. But then what you're going to see is we're going to roll back to the Venezuela thing. So let's just bring up the oil trade. And I don't even want to get into Venezuela because I don't think it's really going to be, it's going to be a nothing burger when it all comes down to oil. Okay, I'll leave it at that. And I can explain why at some other point. So if you have oil prices right now under $60 a barrel, and some analysts are saying it might go to into the 40s, you're going to see inflation plummet because of energy. Then the other piece of this puzzle is the rental equivalent to housing. It was at a factor of about 7 or 8%. Then it went down to 5%. Then it went to 3%. Now it's about 0. So the Federal Reserve's numbers are still using a factor between 3 and 5. So you take that factor out, you take oil factor out, you're going to have inflation coming down. And I can almost promise you that. But we don't have a crystal ball. So my expectations, I think things are going to be completely flat. So if you're sitting on the fence, you have a high rate right now, use this calculator. What this calculator is going to do, and I'll give you my forecast. My forecast for next year is 5.875 to 6.25. I've been saying that for months, and I don't think it's really going to change. I think it could stay stickier at the 6.25% until something brings it down. Okay. And the something might be the Federal Reserve changing their members, might be, the tariffs getting rejected, then enacted, then settlements, and then all through that. And then we also have a political year next year, an election year, subprimary, whatever the hell they are. And you're going to have effects on that. So my expectations, rates maybe come down a little bit later in the year. So let's use this calculator. And here's what I want to get to. The average loan out there right now is about $380,000. 360 months is 30-year term. The rate right now, if you've closed in the last, since 2022 to now basically, or just last year, about 7.6%. Okay. If you wanted to refinance, this cost is all over the map, but just put in 3,000 for right now. Is if you were to refinance, it costs you about 3,000 bucks. Okay. Scroll down and the refinance. Did somebody say something about this fee? Let's go back to the fee. If you didn't ask a question about that fee seems a little low, let me explain it to you. When you bought your home, this fee probably was about $6, $7, $8, $9, $10,000. When you refinance, the cost is much cheaper in almost all cases. Like for example, in Illinois, if I bought my house, I think the title fees would be $8,000, $9,000. Refinance, they're $995. So that's kind of the equivalent. So we're going to scroll down here and say, okay, today's rate is 6.19. And I'm just going to cape with a 30-year term right here. You can actually put in anything you want. If the savings over here is enough, you can click it down and say, okay, I'm comfortable with my payment now. Hell, I'll just pay off my house a little bit sooner. That's what I would suggest. So then you say, okay, well, Dan, I know rates are going to go down. So within 12 months, rates are going to go to 5.75. So should I wait or should I refinance? So it runs all the analytics, and here's what it comes up with. It says, well, right now you can save $346 a month. But if you waited 12 months, what would happen is you're going to make all those payments that whole year at that high rate. You're going to pay that much more in interest. The difference in true savings to you in your pocket over $4,000. So should you wait? Probably not. Some cases, if the closing costs are way too high, wait. Okay. But if you have closing costs in some situations, especially if you're a veteran out there, many times I'm working with a couple clients right now. Many times if you have a disability and you don't have a VA funding fee, that's the biggest part of your closing cost. All you'd have on your refinance basically is title fees. In some cases, like I said, if you're in Illinois, it might be $995. So if you can save 100, 200, in most cases, we're saving people over $500. You save $500 and it costs you, just title fees of $1,000. Pretty good deal. Okay, so that's what that calculator do. The last but not least, here it is. He must have it ready because I already plugged in some numbers. Okay, well, this is this is in beta, so this is why this isn't posted. Okay, so here's this cool tool for you guys. If you stayed this long, God bless you, because I got some bonus material for you. This is the coolest thing I've seen, and here's why. I'll tell you. It is hard as hell as a loan officer when people call you to kind of keep everything in your brain of what products do we have? Can we do that? Because we get calls every day and some are bizarre. And I've been doing this a long time and some are bizarre. So what I asked my son to do is I gave him this challenge and it's like, good luck with this. He was able to take all the programs we have and we just updated because we just add some new banks in. He's adding those in now, but let's go over this stuff. And if you're a homeowner, home buyer, this is awesome. If you're a realtor, you got to know these things because your consumer probably doesn't. If you're a loan officer, you're probably going to say, I didn't even know we had those programs. So let's get to it. We're going to get to the purchase loans. That's probably the easiest one to do. So if you're looking to purchase a house, what we want you to do is just go down through here and put in purchase price of the house. So that's $400,000. I'm going to put down payment. Let's go big right now. Let's put it $20,000. I just want to do this as a demonstration. We might post this so you guys can test it, but it might not be 100% accurate. That's why we're working on it behind the scenes. You're looking to buy a single family home. It would be your primary home. Do you live in a high cost area? Most of the time you don't. If you're in sections of California, New York, maybe Chicago, LA, some areas like that, Miami, you might want to click yes, but it's most likely no. And then here's a lot of times it kind of stops there, but you got to go down through the rest of this for your financial profile, because this is really where you start to narrow down what programs you're going to qualify for. So this one, we're going to try to make it as simple as possible. 740 credit score. I make $8,000 a month. My debts are $500. Estimated monthly payment. I can afford a house payment of $2,500, say, gives me my situation here. And then going to ask you a little more details. And here's where it really starts kind of diving in to those programs that I was even saying, we have that. So let's go into this. Are you a first-time home buyer? Well, let's say yes. Veteran? Let's just open up the doors to all these. Yes. Are you in a rural property? Well, if you are out there, yes. And my mom's house just sold. It's outside of Pittsburgh. Never knew. The area I grew up it's in West Virginia. It was rural. You can get a USDA loan. Never thought we could get a USDA loan back in where I grew up. So I learned something this time. Income in area median income. this is probably most of you would this answer would be no. So if you think your income is a little bit lower for your area, you can actually look this up, area median income, and it'll give you some numbers, and it'll just say you plug in your zip code and it'll tell you here's what would qualify for 80% of the area median income. I don't want to get you confused. So let's just say no there, no to bankruptcy. I'm not an I-10 licensed medical professional. We'll put no for that. So now this is going to go over here and say, okay, here's what you would qualify for. So it starts going down through here and it says, okay, you should qualify for a conventional loan. Yeah, you're a first-time home buyer, so you actually should qualify for a 3% down program. FHA standards, yes, you can get the standard loan. You can actually get a 203K loan with FHA, because you only need a 580 minimum credit score for those and those. FHA manufactured home, well, yeah, you qualify for that too, and you only need a 580 credit score. FHA construction to perm, these are all the programs you would qualify for. Now, here's where it gets a little interesting. Do you even know what that is? You might want to check that out. It's kind of cool. VA jumbos. And then you start getting down to some of these areas, high balance, jumbos. And then you start to get into some bizarre things. Interest only, no ratio loans, I-10 loans, foreign nationals, non-warranted condos, construction to perm. They just add up. And these are the areas where when you're going down through here, you can pick the criteria, and it's going to give you basically every program. So if you want this, you want a medical profession, yes. You have an I-10, yeah. If the program's there, yes. If you had a bankruptcy there, yes. So then it opens up all the gates. But you'll even go down through here and it's going to say, this is what we're working on in the background, trying to fill in the voids for all these doctors and professional loans. Why doesn't it qualify? These are what we're working on in the background. But you can see all the programs available. They're crazy. And I bet you didn't know half these existed. So if you're a realtor, maybe you learned something today. There's programs out there that we can offer that maybe your local broker can't, because we have all these programs and we have so many programs. If you're a loan officer, hopefully you learned something today. There's programs out there. If you're a homeowner, home buyer, this is what we do it for. It's to educate all you guys on trying to figure out home ownership. Should everybody buy a house? No. No, there's a lot more things. I shouldn't say it just this week. I just had the plumber here last night fixing a leak in one of our closets, and our heater was out last week. So yeah, it can be a pain in the ass to have a house, but it is I consider it a luxury to a point. All my family's originally from Italy. I guess a long dream of my father. And if you're an immigrant here, home ownership. I mean, you just want pride of owning your own thing. And one day I should show you pictures of my father and his family when they were little, the little home they lived in. It was amazing. But they were able to buy that thing. And we was sold it years and years later after my grandparents died. It was sold for $30,000. It was $30,000 they didn't have. So it's kind of a forced savings account to some point of view. I love it, and that's why I do what I do. So if you're out there, I'm not trying to talk you into buying a house. I just went through some of the areas that you're most concerning. Oh, let's go down through here. Did we finish this? Yeah, we did. Here, let's finish this with this. Some of the areas, my apologies. I'll try to cut this and edit this. The areas that are going to suffer, well, here they are. And the reason being is up through here, these are the most affordable. And this is where I want to leave it with you guys. I apologize if I pre-close this thing. These are the areas that are probably going to see the most benefit of a home affordability. I might say home appreciation, increase in values. They might just say steady, but at least they're there. Here's why. The percentage of your income that it takes to buy a house in these areas, there's where they are. They go up 30%. You go down through here, look at this. San Jose, California, 68% of your pay to pay your house payment. Well, think about it. How much from what they pay you and what you take home, how much do you lose in taxes? It's probably about 25%. So if you're paying 70% in your house payment, not enough money left on the table after that. So these are where the areas that I can see, maybe they won't suffer, but this is taking the highest income to afford these areas. So people will always live there and want to live there, but these are the areas that I'm saying these might have the most adjustment that you might be seeing in the next year or two. And that's my reason why, folks. So hopefully you learned a little bit of something today. I would love if you guys would participate, but That's my housing forecast for 2026. Don't really think anything's going to go on with that. I'll give you a precursor of my rates. I think rates are going to be about 5.875 to 6.25. There's no reason for them to drop much more, because if you really look at it, you have the employment market not looking dismal. And you have inflation. Like I said, I think we're going to see the January effect, and then we're going to see that come down from there. So is that still going to make houses affordable? No. If rates get to 5.99, will it make houses more affordable? No, because you have those other areas. Just be cautious of. Make sure you drill into looking at those taxes, making sure you shop around for that insurance quote. And if you're trying to shop around for mortgage rates, I'd love to help you, because that's what I do here at the Rate Update. So join me each day. If you would subscribe over there, because every day I come out in the morning, I'll give you the opening bell and what my thoughts are, what the market's going to do for the day. Then I come out with a short video at the end of the day. It's usually something that happened during that day. And then I give you the closing bell where we ended and where I think the markets might be going the next day, and the economic news coming down the pike that will be affecting these things. Because my whole goal every day, I'm going to do it, is to help you try to figure out what next going on with those and the whys behind it. Hey, do me one thing. I was doing in my videos, I was doing that lock and float thing. Give me a thumbs up or a thumbs down if you like it or not. I just was doing it to be funny, and I didn't get any reaction. And I'm like, okay, folks, give me some kind of reaction. So that's it for today, folks. We are, I think, like 18 people away from 40,000 subscribers. If you can get me there today, I'd greatly appreciate it. So thank you so much for joining me this afternoon and taking part of your day to learn a little bit more about real estate and where I think house prices are going to go.